Hi, my name is Siddharth Goel. Welcome to the Nifty Shloka YouTube channel. And today we will talk to you more about, what we are doing and how it works and why it works, more importantly, and sort of our approach to markets. So for people who've seen this symbol for the first time, we talk to a lot of people, and 90% of people think there's an infinity sign, but actually this is the symbol for chaos. So for us, markets is a chaotic system, and anything can happen. And to deal with that sort of fundamental trait of the markets, we have come up with a very interesting investment framework, which we will get into more detail about, and explain why we think it has a good chance to do well in the coming years. So the secret to markets really is these five words. This also happens to be a Oscar-winning movie. If you haven't seen that, please check it out. An amazing movie, and it says everything, everywhere, all at once. So the main idea really is that if you want to do public market investments, it's better to create a diversified portfolio and even have a trading layer to make money in all kinds of different markets. So we are sort of promoting creating a consolidated offering, all in one place, and we'll show you how we get that done. Yeah. So the main sort of idea behind this approach is that we don't want the portfolio to be anti-fragile. So by having so many different strategies together, and you can see we are having close to 25 plus different strategies across all these asset classes with all these own logics and sort of roles. We're sort of building a football team, cricket team, like a sports team with all different kind of characteristics of each of these strategies, so that they all work together as a bundle. Yeah. And so as you can see here, this is like our sort of live asset allocation at the moment. And you can see that we've got equity, we've got debt, we've got gold, silver, REITs, we have some cash and liquid funds for this whole trading layer. So one more thing you'll notice is that we are trying to make it a three-dimensional way to make money. Most people are sort of either doing too much equity or doing too much debt or doing too much gold. Obviously gold's done really well in the recent past, but who knows what happens. So it's better to sort of have a diversified allocation across all these different asset classes, and then even pledge some of your investments to make even more money. Okay. And the best part is that the Zerodha platform, I would compare it to like a Swiggy or a Zomato for the Indian audience, or these quick commerce apps and food delivery apps. These would not exist without a smartphone with GPS. And the same thing sort of applies, that this new way of doing wealth management would not exist without the Zerodha platform, because all of this is happening on that one single platform. Yeah. And I don't want to talk too much about results, but basically we've got live track for about 25 months now. We launched this whole strategy in 23 August, and right now we are in September 25 while we record this. But I would try to summarize that investing in one sentence is about creating alpha on the, you want to make more money when the markets go up, lose less when the markets go down. So by doing this whole approach, you're essentially creating alpha on both sides, and that's the real game. And I just want to highlight something. If you guys don't know what max drawdown is how much it's fallen from the peak in this time frame. So Nifty in this time frame has fallen close to 16%, whereas we only fell 9%. And TWRR is basically a time weighted rate of return, which is annualized. So you can see that though the Nifty returns have been only 12.3%, we have done really close to 4% alpha on that itself on an annualized basis, which is significant. If you can continue this kind of trajectory, we'll do even better. In fact, we have left at our own learnings and mistakes to develop this. So both these numbers would actually be better, but we obviously don't want to misrepresent anything, so showcasing as things stand. But it's already a promising output, and this is what we aim for. And one more interesting thing about this, as a from a framework perspective, is that you must have heard a lot in markets where they say higher returns means higher risk, or lower risk means lower returns. But we are able to do both, and this is really possible. One is from the diversification, which helps with drawdowns, but without this F&O layer, this kind of result will not work. So this whole people talk about F&O being dangerous and risky. Means everything is risky in life. There's risk even when you get onto a plane, but it's all about how you manage it, how you manage your position size, how you manage your leverage, and that is really the key to that layer. Okay, and so this is now data directly from Zerodha. So you can see that our equity curve is also much smoother than the Nifty curve. So when markets peaked in September 24, we were still beating the market, and when the market started falling, we did not fall. In fact, you must be noticing here that our delta sort of gone down because some of our strategies which we launched in 2025 had some process issues which we sort of fixed now. So you can see again the delta sort of starting to go up again. But it's really, finally in investing, you want the equity curve to be going, in this direction, but you don't want the ups and downs, which typical markets, all equity markets go through as in the long run. And this is the same sort of data, but from a drawdown perspective. So as you can see, the whole, I would say, the game to markets is to reduce your drawdowns, and if you can if you don't lose money, you will make money. It's literally as simple as that. So this is really objective data, from our life experiences, which we are sharing here. And this is really the point is that we started in 2023, okay, and the drawdown was about 16%. But if you see this historic Nifty data, in GFC, the drawdowns were close to 60%. In COVID, it was around 40%. And the 16% keeps happening every few years. So the drawdown is a feature, not a bug. And I would say our whole approach is like, you need to minimize your drawdowns. That should be the name of the game. If you lose less, you will make more, as I just said earlier. Yeah, and this is our aspirational target. So we think as our processes have improved, we will be able to get 60% lower drawdown with 60% better returns. So it's ambitious, it's aspirational, but this is the journey we are on towards. Yeah. So again, I would like to reiterate, this is what we want. This is not what we are getting. I've already shown you what we are getting. But by doing all this together and following this process, there is possibilities that this could happen. Yeah. And that's all I wanted to talk to you guys about. At this first sort of longish video, we will keep creating more content and share more of our knowledge